Hey guys, what is up? Welcome back to my channel, the best place to learn investing, trading, and the stock market. Given the recent coronavirus situation, I felt like this is worth addressing so that we can discuss what's going on, whether should you sell your stocks now, and how I am investing and trading in the stock market right now. To give you some context for this video, I'm a short and medium term trader, so I'm not a buy and hold investor. So when a news as big as the coronavirus comes out, I will definitely pay even closer attention to my stock portfolio because such news can and do affect stock prices, sometimes even dramatically. So how has the stock market reacted since the coronavirus broke out? Let's find out. According to the World Health Organization, the first reported case of the coronavirus was on the 31st December 2019. So the first reported case was December 31st of last year. Let's take a look at the price of the stock market on that day. This is the price chart of the SPY, which is the ETF which tracks the S&P 500. The S&P 500 represents the US stock market. So what's the closing price for the SPY on the 31st of December? It is around $322. As of this filming of this video, it is the 12th of February. The closing price for the SPY on the 11th of February yesterday is $336. So the SPY, a representative of the US stock market as a whole, has actually rose from $322 to $336 in the midst of the corona. That's around a 4% increase. Even though there are many factors that contribute to the rise in stock market prices which we might not know of, there are a few significant events that we can look at. The first is that while the first reported case of the coronavirus was on the 31st of December in China, it wasn't until the 21st of January that the US had its first reported case of the coronavirus in the country. So while the coronavirus was a serious health situation, it wasn't until roughly 1 month later that the US had its first case on its own shores. As you can see on the price charts, after the 21st of January, which was the day the US had its first reported coronavirus case, prices fell on the subsequent days. The realization that the coronavirus was not some situation that's happening far from its shore, but it has actually spread to the US and can have a real impact on businesses in the US, causes stock market investors and traders to stand up and take notice. And maybe the momentum of that causes some panic in investors and traders, which cause them to sell their shares, which might explain why prices fell subsequently the days after. The second is that in midst of the coronavirus, the US and China signed a trade truce on the 15th of January. Again, at that point in time, the US had no reported case of the coronavirus, so investors and traders might not have viewed the coronavirus having a significant impact on the US stock market. But what they think that can have a significant impact on the US stock market is the trade truce signed by the US and China on the 15th of January. If we take a look at the charts, the candlestick on the January of 15 was a bullish candlestick. And the day after the deal was announced, on the 16th of January, prices gapped up. If you're not familiar with what prices gapping up means, is that there is a space on our charts between the previous day's candlestick and present day's candlestick. This is how prices gapping up looks like, and this is how prices look like when it gaps down. So after the trade truce was announced, we see that prices gap up. So what this can mean is that investors and traders viewed the trade truce signed by the US and China to have a greater significance on the US stock market at that point in time compared to the coronavirus. Therefore, prices continue to rise despite the coronavirus. So that are the two main reasons that can possibly explain why the US stock market has rose in price since the start of the year till now, despite the coronavirus outbreak at the start of this year. While investors can look to this news to guide their investing decisions, traders tend to take the news with a pinch of salt and instead use the price charts to indicate what is going on and tell them what to do. So let's analyze the technical aspect of the SPY. So this is the price chart of the SPY, which is the US ETF. So you can see that this is the 31st of December. So the 31st of December was the date that China had its first reported coronavirus case. And then this was on the 1st of January, which is the start of the new year, 2020. So as you can see, prices fell and rose after that. And it continued to rise. And then on the January of 15, as we have talked about earlier on, the US and China sign a trade truce. So after that, the day after that, you can see that prices gap up because of the good news. And then it continued to rise. And then on the 21st of January, we have mentioned earlier on that the US had its first reported case of the coronavirus. So the next day, the candlestick was bearish, and you can see that prices subsequently, it fell, right? And then it starts to rise back up. So currently, you can see that there's a minor resistance level here. So it has tested once here, twice here, and then at this point, it tested around the third time. But then after that, prices broke out, and then it went back down. And then you can see this one, it comes out here, and then finally prices broke out of this old resistance level. So as right now, we can see that prices look quite bullish, and as of the 11th of February, prices have rose about 4% since the start of the year. So that is the technical aspect of the SPY chart. So being more of a trader myself, my trading decisions are ultimately decided based on the price charts. If the price charts and indicators show me that prices are falling, I would either start taking some of my profits off or start tightening my stop losses. Check out my video here on stop losses and how you can use them in your trading. If prices continue to rise, I will continue to let my profits run. Therefore, while the coronavirus is a significant health issue and can possibly lead to a panic sell-off, causing stock prices to fall dramatically, unless I see the sell-off happening on the charts, I will continue to hold on to my stocks. Because as we have seen earlier, even in midst of the coronavirus, the stock market has actually rose by 4% during this period. Ultimately, it is the prices on the price chart that affects our profits and losses and not the news. So I'm basing my decisions on the price action on the charts and not the news. So instead of selling my positions now, I am tightening my stop loss and continuing to let my profits run. So that is my strategy in the stock market during this coronavirus period. This is not financial advice, so make sure you do your own research before taking any action in the stock market. With that said, I hope you guys have liked this video. If you do, give it a thumbs up and subscribe to my channel because I release new investing, trading, and the stock market videos every week. Stay safe and I'll see you in the other videos. To your financial success.